So the rolling average of 30 days on market for listings in Hoboken as part of the first half of the year report in 2022. As you can see, at the beginning of the year, in the January-February time frame, there weren't a lot of homes on the market, so the rolling average was really under 75 for all of January, February, and even March. As the market was really heating up, homes were coming and going very quickly. And then as the second quarter kind of kicked in there, you saw a spike of homes on the market after 30 days, and this was a function of people putting their homes on the market and maybe not being absorbed quite as quickly. But then it bounced up again, really as the interest rates rose, especially in May, where now we're almost double the amount of homes on a rolling average that we were at the beginning of the year. And this kind of reflects the fact that if your home is not priced well, it's going to sit for more than 30 days. So this is the average days on market rolling number for the first half of 2020 in Hoboken. As you can see, the number continually decreased pretty much from the beginning of the year all the way down through April, and then kind of flattened off at that point. Again, this is a rolling average of what was under contract. So at the beginning of the year, the average home was on for about 40 days. And as those homes started to come off quicker and quicker, that number continued to decline all the way into March, where it hit about 20 days, and it's been about flat. And these for homes that are under contract, average days of homes under contract. So know that what it's saying, even with the interest rates, if you price your home correctly, it should sell in about 3 weeks. To put in perspective mortgage rates, the chart really shows a historical perspective. When homes sold in the 70s, the 80s, the 90s, the 2000s, and the 2010s, how the rate was and where it is today. Did you know that the rate today is about where it was pre-pandemic? So everybody thinks that the rate is really high today. It's just because for the last 2 years, the rate has been incredibly low. But if you look at the average rate for the 2010s, it was about 5%, which is about where it is today. A lot of homes got sold and a lot of people made money in the 2010s. Remember the boom in the 2000 era, 2000 to 2007? The rate there was around 6%. So just putting some information in perspective that homes will continue to sell with interest rates at 5, 6, 7% if we ever get there. So this is the first half of 2022 for Hoboken. A quick market snapshot of condos. The real numbers to look at here are the total volume of contracts was 472, which is a very strong first half. Not exactly the same as last year's booming numbers, but it's still a very strong year. And the key number here is the days on market. The median days on market was 13. So it wasn't that the number or the volume was depressed because of real market forces. It's really because there just weren't enough homes to sell in the first half of the year to make that number higher. If there were more homes, that number would have been higher. Hoboken rolling average, 30-day average of median days on market first half of 2022. One of my favorite charts that really summarizes the market in 2022. Look at it, started off at about 30 and very quickly by mid-February dropped down to 15 and kind of hovered between 10 and 15 days for about the next 4 months. That was the story of the first half of 2022, is that homes came and went super fast. Condos in Hoboken by price range for the first half of 2022. So when you look at this chart, it really shows that the lower price condos would have significantly more volume than the higher end of the market. But really, you're starting to see that there's the lower end, which you can see is the really the one bedrooms in the 4 and 5 and 600,000. And then as you get to the 2 bedrooms, you're really pushing 900, a million, and the 3 bedrooms, $1 million to $1.5 million. And understand that these ranges are becoming much more pronounced as there starts to become a wider gap between them. So as you again take a look at the price ranges, know that again, if you're just looking at the 1 bedroom market, you'd probably be looking at the 4 to 6 range. Hoboken sold units first half of 2022 on a weekly basis. As you can see, that sold units typically run 45 to 60 to 75 days behind contracts. So when you're looking at sold units at the beginning of January, even though the volume, when you look at the amount of contracts, is very low, these sold units were really things that were written back in November that are now closing in January. Nobody wants to close the last 2 weeks of December, so that's why you tend to see a spike at the beginning of January, where everybody kind of backloaded or front-loaded those homes to the first part of the year. Then you notice that there's a precipitous drop, and that really, in the February-March time frame, and that correlates to homes that went under contract in December and January, which is really the slowest time of the year. And then all of a sudden, like a rocket ship, if you looked at the beginning of January to the middle of January, the volume really started to pick up, and then it started to level off at really decent numbers, and that's what you kind of see here is almost that little roller coaster wrap. So this tells a very good story on a 45 to 75 day lag. Hoboken under contracts weekly numbers for the first half of 2022. So no surprise here that if you overlaid this with the solds, how it kind of mirrors it with a 45 to 65 to 75 to 90 day look forward. So at the beginning of January, the first couple of weeks, the number of contracts was relatively low, and then it shot up like a rocket ship after that, really climbing and then leveled off pretty much in the April-May time frame. And then you could see at the end of May, beginning of June, where the interest rates definitely took a little bit of a toll on the market at that point. And you can see that as the drop. So it's all right there in sort of black and white, that it started slow, popped up, kind of boomed, and then dropped off a little bit for the interest rates. Not a lot, but a little. If you found this data valuable and want more, just click the link and you'll be able to see the rest of the videos that I have on the 2022 market. I also track the market weekly on my website. So definitely subscribe to my YouTube channel, visit my website, and you'll get more analysis than you'll find anywhere else on the local market.